So we had a little bit of a stock market pullback the other day, and already everyone's emailing me, is this the top of the rally? And it very well might be, but I wanted to show you guys one really important chart that I think is just crucial to really put things into perspective. So I personally, I continue to think that, well, we see it, that economic data really around the globe continues to slow. So there really is not a whole lot of reason for markets, for the equities to really have another major leg higher from here right now from my posturing. That's not to say that you can't have trades. In fact, I just made a video for our Clubhouse members and I give them 2 new buy trade ideas that I think will work. But in order to contextualize where we are, let me show you guys one chart that I think is really the most important thing to look at right now. And that chart has to do with where the bond market is versus where the stock market is. And what I did here on this chart, the green line is the S&P 500. And if you look at this closely, you can see that the last time the S&P 500 was at this area where it is right now, which is around 2,800 or so. It was late November. It was there also in so 2018, early November, and of course in October after an initial bounce. Now that's the stock market, but the bond yields, which is the blue line, 10-year bond yields, were closer to, let's call it 3% at the same time, the last time the S&P was at this level. But bond yields now are closer to 2.5%, 10-year treasuries. Given the fact that the smart money tends to allocate money to bonds, this to me tells me that smart money is allocating a lot more money into bonds versus stocks, and I will have to respect what bond yields are doing. And by the way, it's not just US bond markets. You can see the same type of reaction in German bond yields, which are lower than they were last November, Japan, and really many other places around the world. So to me, the bond market here is telling a very different story than the stock market. Doesn't mean that the stock market has to fall apart. In other words, if you look at this chart again, I'm not necessarily saying that the stock market has to revisit or even undercut those lows from last December anytime soon, but I do think we're probably overbought. We need to consolidate, and I think there will be plenty of opportunities for single name stocks to correct more than the broader market. And that's something that we want to be cautious of here. With again the bond market telling a very different story. So this is something that is really at the essence of what it takes, in my opinion, to be a successful trader and investor. And in that vein, we're finally ready to take initial registrations for our Arizona Springtime Stock Options and ETFs Summit. I'll show you that link down below and or in the video, or if you got this by email in a second. But this summit is all about teaching you not only how to execute trades from chart patterns to technical analysis, structural analysis, option trading strategies that made us 68% last year using the Market Rover. But it's also really teaching you how to gain perspective, great camaraderie in our Springtime Summit. So I would urge you to sign up for that. Again, the registration literally just opened. And so let me show you this quickly. Again, we're going to do this in Phoenix, Arizona, Stock Options and ETF Summit, April 26th to the 28th. When you get to that page, the link that you have below, or again in the email, there will be you'll see some customer testimonials. You'll see a little video about it. Again, everything that we do there. It's great fun, and certainly I would encourage anyone to join us for that. So make sure you have a look at that. If you guys have any questions on it, please let us know. You can always leave a comment down below or email us support@thesteadytrader.com. But finally, registration is open for the Springtime Stock Options and ETF Summit in Arizona in April. And I'll see you guys soon.